Hey there, welcome to ShareTreck. This is Raj here, friends. The indices are looking great, and I had a quick look at the indices on TradingView platform. All of them are looking fabulous. I'm going to talk about this because I think a bit of bullishness can be seen in the market, and maybe the next week is going to be great. So without further delay, let's get started. Welcome back, friends. Here we are looking at the Dow Jones Industrial Average. This is the first one that I have taken for to look at, and you can see here we have broken through one of the trend lines that we had, the bearish trend lines that we had. We have clearly done a gap up, and then we did one better on the last trading day by converting this line of resistance at 43,294 into a support. So Dow Jones is looking good now, and it is within this diagonal line of support. So it has got two supports for it. This was a very strong resistance and it broke through it, and it took it 2 days to make that happen. So this is not a fluke, and I think this is going to hold well. If you look at the MACD, that's looking great. Momentum is also looking great. Next, let us go and look at S&P 500. In our last session, I had said that this diagonal line of resistance has to be broken, and we have broken it. Now I would like to see that it goes above this high out here, because we are still just about making a new high, but it's not a higher high to break this trend. In a way it is, because we have crossed this diagonal line, but I would be more comfortable if we go above this level out here, which is around 6037. Which means we are going to cross this one, and then I'll feel comfortable, or at the very least a retesting and bounce back. So that's what I would be looking for. MACD is looking good. Momentum is also looking good. Given that Dow Jones is going in a bullish way, I think S&P should also move in that direction. Russell Index has also broken through this diagonal line of resistance, and it was following a bear channel, but now it has created a new higher high. So this is something very positive in my opinion, and I'm looking at the MACD, which is bullish, and momentum, which is also above average. Plenty of room for the RSI. We are above the 200-day moving average. Fantastic. Now let us look at NASDAQ. NASDAQ has broken above this diagonal line of resistance of the bull flag, and I'm going to convert that into a support, and we are on top of it. We have broken out. So we also created a new higher high. So we want to build up on that, and we don't have a bullish MACD, but we don't have a bearish one either. We are neutral out here. Momentum is above average. So I'm hopeful that NASDAQ will also follow suit. And then put call ratio is at 0.68. So this is very bullish considering the trends that we had in the past. So I'd say it's pretty bullish. That adds to our positive bias. And if you look at the VIX, the VIX has just about settled down on top of 15.88, which happens to be the support. VIX ended at 15.96. So it's gone as low as possible. MACD is bearish. Momentum is also weak. So I'm expecting that when we open tomorrow, when we open on the next trading day, we're going to see it below this horizontal line of support. And if that happens, I think all systems are go. We'll be doing extremely well. After that, I would like to point out that we have increasing market support. The breadth of the market support is increasing, because if you look at the number of S&P 500 stocks above that 200-day average, the trend is still positive. It's moving up. If you look at the same for above 50-day average, there was a gap up and we have gone up further. This is great. And if you look at those above that 20-day average, again, you can see a gap up out there. So things are improving in terms of the market breadth. So that's again another positive. Let's look at our genomic watch list. First, I'm looking at Verve. I think Verve is on a bull channel. I have drawn this bull channel out here. It seems to be on top of it. It's also above the 200-day exponential moving average, which is another positive. And if you look at this diagonal line of resistance, which was coming from the previous stops that we have had, we are on the top of it, but I wouldn't give too much importance to this line because we have broken through it many times. It was valid earlier, but it's no longer valid now. So we'll see if this gives any support. If it gives a support, then we can bounce upwards, or else I would expect the 200-day exponential moving average to try and provide us some support, assuming that the overall market sentiment becomes risk off. I think people are starting to enjoy a lot of bullishness. Then I think along with the overall market, we would be able to buck the trend out here and start moving up a little bit. Otherwise, I think the 200-day exponential could potentially give way like it has done many times before. The stock, I don't think, is fundamentally very strong at this point of time. So the 200-day exponential moving average is not able to give it much support. It remains to be seen whether the changing conditions are going to make any difference to Verve at all. Next, let us look at DNA. Ginkgo Bioworks has done a double bottom out here. I'm waiting for it to cross above this line out here, which is at 11.90. Right now, Ginkgo is at 10.83. If it crosses 11.90, then I would say that we have formed a proper double bottom, and then I can start plotting where we would be able to find a price target. There is also the risk that it could become a head and shoulders, so one has to be careful. It's too early to react. But whatever I see right now, I'm encouraged because MACD has turned bullish. Momentum is above average. Plenty of room to the RSI for the RSI to go up. So Ginkgo is looking good at this point of time from a technical perspective. Kaibu Biosciences is not doing much. It has been going down steadily, and it's consolidated for the last 1 week or so in a range. And I don't see any clues for anything going forward. CRISPR Therapeutics, on the other hand, has picked up a little bit in the last week, and it is still, I think, a good deal in terms of its price, considering where it has been in the past, $40. But I think that there would be other opportunities for us to pick it much lower, around 38.68, if the overall market does not pick up. If the overall market picks up, then I would say that this series of new higher highs would denote a bull channel, and we'll be looking at the target of 42.84, which is a resistance to break through. And in that case, I think we'll be looking for much more positives from CRISPR. Right now, the MACD is looking good and the momentum is just about average. So if the overall market picks up, I think CRISPR will also pick up. And I would say the same thing for Illumina also. Illumina has been consolidating a lot, and if the overall market picks up, I think Illumina will definitely target 141.43. Next, let us go on to Grail. Grail was on a bull channel and then it broke down. Right now, it is still above the 200-day exponential moving average. So I'm comfortable at this point of time because of the 200-day exponential moving average, which has provided us support in multiple occasions out here. However, the MACD and the momentum do not inspire much confidence. But just like Illumina and CRISPR, if the overall market goes up, Grail should be able to start challenging this diagonal line of resistance, which happens to be at this point of time at around 18.37. That's going to be the next target for Grail. Next, let's look at Prime, which is range bound in the bear channel. A good opportunity to do some amount of swing trade if one is patient. Then we look at Beam Therapeutics, which has not done very well, not done much at all in the last 1 week. MACD and momentum not looking that great. Altimmune has been picking up. It's creating new higher highs, but it's still in a bear channel in my opinion. But when I look at the MACD, I feel positive. Momentum still needs to pick up for it to do anything great. And the thing that I'm more worried about is that it's below the 200-day exponential moving average. But some experts feel that when stocks, really good stocks, are below 200-day exponential moving average, that's the time to pick them up. I don't have the kind of money right now to put into Altimmune. Of course, I have cash sitting in the account, but from a risk management perspective, from a conviction perspective, I'd rather put money on some Nvidia or maybe Broadcom or something like that rather than Altimmune at this point of time, because the momentum is riding with those AI stocks and not with biotech. But among all these, Altimmune seems to be good, and I believe Altimmune has also been included in the Nasdaq Biotech Index, so that's also giving it a little bit of a boost. So this is a good company. Pemvitude, when it gets approved, it's going to be great for this stock. I have some in my portfolio, and I wouldn't be dollar cost averaging or anything. I'm just going to hold on and wait for the good news about Pemvitude to come across. Next, let us look at Bluebird. Bluebird Bio is consolidating for the last 1 week. It has got a support which which is at around 7.66, and it has got a resistance which is around 10.18. Again, a good swing trading opportunity, assuming the past trends will repeat and will remain range bound within this. Not much of assurance from the MACD and the momentum. And if we go to Allogene, it's a very bad story out there. Allogene has been dropping consistently. It seems to have found a floor somewhere out here. I think I'll draw a line out here, which is a line of support. So this happens to be at around 1.79, which is giving a support to Allogene. If it breaks down below, I don't think we have any history of it going below that. So it will be new lows that it will be plotting. Next, I go to mRNA, which I wouldn't touch for any reason unless there is another pandemic and they have some vaccines to be made. It's a huge gap down out here, not looking great. Let's look at ARCG. ARCG has also been consolidating and it has got a support at 22.94. MACD and momentum are not looking that great. But overall, if the genomic industry picks up, if the overall index picks up, I think ARCG would find the ability to move a little up. But overall, if you look at the position of the pricing, it's below the 200-day exponential moving average. So on the whole, all the genomic stocks, the startup stocks, they are not doing very well. They are very weak, and some of them could be deals, the other could be dangerous, because only good companies below 200-day exponential moving average will make a good purchasing option to dollar cost average. Bad companies would continue sinking further. PACB is not at all doing very well. It's converted the last support of 1.75 into a resistance, and it's getting weaker by the day. MACD and momentum do not ensure much confidence. Given the fact that the momentum is improving a little bit and that we bounced off the bottom of the oversold condition on the RSI, I could hope for a little bit of a jump going forward. And if the overall market sentiment improves, probably we'll get a little bit of gains next week. And then we have Intelia. Intelia is continuing to go down. MACD, momentum, all of them are looking very weak. It's been beaten down so much that there should be a dead cat bounce probably on Monday, and that could see the MACD cross over to the bullish side. However, there's heavy resistance out here. This diagonal line of resistance that we see here is going to be a problem for Intelia. Until it breaks through that, I don't see how things are going to improve. And I'm looking at Editas. Editas has done a gap up and has consolidated a little bit. I'm working on a separate video for Editas. You can expect it either today or tomorrow, and I'll talk more about it out there. But overall, MACD is looking good. Momentum not that great. Iowa has come down further. It has been consistently falling, and it has lost almost, I would say, somewhere around 45% all the way from 11th of November 2024 onwards. So it's not looking that great. And if I was to look at the last position that it was in, this is the true representation of how much it has fallen. It's fallen 51.76% since 7th of November 2024. That's a huge loss for Iowa. Unicure gapped up, went up a little bit, and then started coming down steadily. It's consolidating a little bit out here. MACD is improving. Momentum is also improving. But there is nothing much to go by. But the fact that it is way above the 200-day exponential moving average and on a bull channel, that makes me feel comfortable at this point of time because it's making new higher highs. So that's good for Unicure. Sana has dropped after the gap up. I think the initial excitement is gone and the share is steadily coming down. We have earnings coming up on 13th of March. Closer to the earnings, I suppose we'll have some positive sentiments. So, well, that said, I think when it comes to genomics, patience is very important. Those of us who have got stuck with genomic shares at a higher price, which has started coming down, it's going to be very difficult. I can empathize with you. I have autoimmune in my portfolio, which I'm struggling with, but I'm hopeful that it's going to get monetized as soon as possible. And with regard to opportunities out there, I think there are plenty of opportunities out there. In the defense sector, there is this drone technology, and with AI on the drones, they become drone killer drones and those kind of things. That is the new kind of warfare that are getting into. I think the future warfare is not going to involve too many of the traditional methods like having aircrafts and having soldiers on the ground with their snipers and other things. It's going to be more drone and disposable aircraft, remote controlled aircraft with a lot of destructive capability. Those are the ones that are going to be in vogue, and therefore many of these governments will be putting a lot of their defense expenditure on those kind of gadgets rather than big airplanes and stuff like that. So I'm thinking companies like AV and those which are making drones, those who are doing surveillance robots, those kind of things are going to be doing much better. So that's one area. The other area, of course, is AI with NVIDIA, TSMC, ASML, all these things doing very well. So even in semiconductors, there are some companies which will do very well, and there are some that are not doing well, like Intel, for example, is not taken off. AMD is still, the verdict is out there for AMD. I don't know what's going to happen for AMD. They may or may not succeed, but NVIDIA needs a competition and alternative. Meta has thrown its lot with AMD. Maybe that could help AMD, and Google also might try to do something in-house as well. So there is going to be a little bit of a churn, but right now NVIDIA is the king, and they have the CUDA system, and they are pushing the boundaries with regard to platform, and they're also making forays and partnerships into robotics where they can use their AI capability as well. So that's another area. Of course, then we come to robotics. There are advertisements for some walking robotics, and in terms of monetization, AI has got monetized. We got ServiceNow selling agents that can be used. Microsoft has got Copilot going on. So there are a lot of things that are happening which are end user oriented, and also there are things that are happening within companies, like Amazon has saved money with coding and upgrading and stuff like that using AI. So there are a lot of use cases out there. Of course, Salesforce is building AI into its offerings. So earlier we used to say that we need to see monetization of AI. I think the monetization is already arrived. So the only thing that we need to be worried about now is the Trump tariffs and what happens when Trump comes in and starts making executive decisions, and when things come out suddenly. Like the thing with Trump is that he may wake up one morning and send out a tweet or a truth or something which throws out something new, unexpected, like buying Greenland or changing the name of Panama Canal. Those kind of things might come up which nobody had ever thought about before, and those things can have a tendency to shake the market a little bit. Apart from that, I think it's smooth sailing. So let's wait and see what happens. So that's my scoop for you guys for genomics. With that, my friends, I'd like to bring this video to an end. So my friends, that's my advice to you, that if you are stuck in genomics, instead of doubling down and putting more money into it, I think you should open your eyes and look at other areas. And if you're not interested in all these newfangled things like AI and drone technology and robotics and all that stuff, look at consumer defensives and utilities, those kind of stocks. Energy sector is also pretty good because a lot of energy is going to be needed to power the data centers and other aspects of AI business. So those are other places where you can invest. And if nothing, Berkshire Hathaway is there. That's a place where you could put the money and let them do the thinking for you. You'll not lose much on Berkshire Hathaway. That's my thoughts, my friends. I want to draw your attention to what is likely to happen with regard to Japan. Now, let's take a look at the economic news for Japan. So we are tracking the yen unwind possibility. I have this data here from last week, January 15th. We had a readout for machine tool orders year over year. The previous was 3%, forecast was 3%. The actual came to 11.2%. In my opinion, this is quite bullish. And we also have another news articles from Reuters, which says BOJ chief Ueda signals rate hike chance next week and yen jumps. There is a possibility that there could be a rate hike, and if the rate hike happens and a few other factors fall into place, there could be a yen unwinding where people might probably cause the market to go down. But apart from that risk, I think overall the market is looking pretty good. I would like to hear from you guys, because this is the right time for us to collaborate as a community, because all of us are retail investors. Each of us has our own ideas and information, but using the comment section actively will add more value to this channel than even the videos. That's my belief, and that's why I started the channel. I want to show what I do as a retail investor, the way I think, so that others can open up and let me know what they think. So together we can have a much better idea about what's happening in the market, and we could probably improve our success in the market to a certain extent thanks to the collaboration with the community. With that, my friends, I'd like to bring this video to an end. If you liked this video, please press a like out there. It helps the channel, and this gets shown to more people and helps the channel grow. Thanks and have a great day. Have a wonderful weekend. Bye for now.